Hey, this is Mike Swanson of Wall Street Window. I want to share with you this weekend an article I just posted on the website. I think it's going to interest you. It's about a sector that is coming out of a stage one base. Now, that's a long-term buy pattern that leads to new bull markets. I'm talking about rallies that last 12 months, 24 months, sometimes even longer than that. I'm targeting 12 months with this sector. But first, let me tell you about 6 weeks ago, I did an interview with Ike Iosif on his MarketViews.tv podcast. He asked me what I thought looked like a good buy, and I mentioned to him the VNM ETF. I actually highlighted this ETF now on my website in a blog post back in December as something to consider. When I was speaking with Ike, though, it was in the process of coming out of a stage one base. As you can see from this chart, I'm talking about the pattern that you see in this chart right in the middle of June as it broke through the $13 level. This ETF could easily go back up to its highs of 2022 in the next 12 months. That'd make it for a larger percentage gain than S&P 500 is likely to make from here to then, and is the type of chart pattern I think one is best to buy into. Emerging markets are coming alive now as global markets are actually outperforming the US stock market this year. I know NVIDIA is all they talk about, but you can hear about it on CNBC every single hour of the day now. I want to point out to you things you are not hearing about anywhere else, and no one talked about this VNM ETF back in December. Yes, it's an ETF that invests in Vietnam, and it might sound scary to people, but the economy of Vietnam is growing faster now than US GDP. We're not going into recession this year. Oil prices and commodities are starting to firm up now. One sector that tends to do well after oil prices bottom and when emerging markets do well is the shipping sector. And many shipping stocks, which pay high dividends, are now coming out of stage one bases. A stage one base is a long-term buy pattern that marks the start of a new cyclical bull market for a stock or sector. It happens when something trades below its 200-day moving average for at least 6 months and then rallies above it. VNM basically did this when it rallied above $13 in June. Shipping stocks across the board are now doing this too. Take a look at the ESEA stock chart, for example. The ESEA stock has been below its 200-day moving average almost all year until it too closed above it in June, breaking through its $20 resistance level. Now it's trading between $20 and $22. A narrow range and a breakthrough of it to the upside would confirm the bullish pattern. The stock is trading with a PE of 1.49 and a dividend over 9%. Another stock in the sector already breaking out is DAC. DAC is paying a dividend of 4.21% and trading with a PE of 3.87. And finally, I'll mention FRO to you. FRO is paying an 11.4% dividend and trading with a PE of 5.40. I own positions in these three stocks. Now, if you want more updates from me, go below this video and click the link to subscribe and get my free stock trading updates and news digest delivered to you via email. And I'll be talking with you later.